Okay, so LEU for our good friend radiochemist. So I pulled up the weekly here just to get a quick reference. First thing I did, by the way, is I drew this trend line. See this white line here? Um, just for reference, okay? And it's actually a pretty clean trend line. So you got a lot of touches here, a lot of touches here, you got a couple of touches here. So it's legit, all right? It's had some good bounces off of there. Neither here nor there. Not the biggest deal. These trend lines are very arbitrary, if you ask me, but it's a good point of reference. So, but what's important for us now at the moment is let's just look at this November 2021 high and then the pain that ensued after this thing. Because this is, LEU is a tough ticker because it'll float. So it brings on the gains, but it also brings on the pain. So regardless of that, I ran the fibs here because I just wanted to get a reference off of this run. Okay. So this is zeroed out over at the 1736 level. And off of that bottom, it regained this trend line pretty clean, right? It just wicked out and came right back up. So it was just a little bit of an undercut. And it just started to run again, right? So, and it made a really nice run. Now, look, this is why I love Fibonacci retracements. Where did it kind of stall out? 50% retracement, not an uncommon spot. Plus, we had a nice this 55.77 spot where it kind of rejected before. So you've had a couple of 50% retracements. Now, we didn't know it at the time because you didn't get the full fib run until you've gotten the pivot, right? So you don't really take fibs until you have good pivots. I mean, one could say that you could probably take fibs off of these, but I just took it off this big one because we're looking back. Either way, it kind of rejected right at this 50% retracement area, and it was a good retracement, and it was a good rejection. So now we've run a smaller fib. Mind you, we're still on the weekly. Okay, so we have our fib inside of our mother fib. Let's just call this the mother fib at the moment, okay? So this is our mother fib, and that's kind of controlling all of the big action that's going to supposedly be occurring in here, okay? So now we have this smaller fib because we just worked off of this run. So it's from this high to this pivot low here, okay? So this is a swing low pivot right here, okay? That's what it looks like at the moment. And we're now coming up into this. Again, we talked about this golden pocket many times. This is the 62% retracement, and it's coming into that now on the weekly. So we want to see how it reacts here. I look at this and I could say, hey, maybe an early pattern recognition type of situation. I'll just draw it for you. Where's this thing? Okay, hold on. Sorry. I'll draw it for you just as possibly. I'm not saying it's going to happen, but I would be keeping my eyes out for a cup and handle, right? And the cup and handle does a little bit of this, consolidates at the high before it moves on forward. Okay, so is it possible that happens? We don't know. It's early pattern recognition, and my drawing is horrible, but that would be what I'd start to see. I'm starting just to see like the beginnings of that. So, one could say if a cup and handle is gonna play out, it's gonna kind of enter into this 55-50 area, maybe reject and chop around for a while, just like this drawing before it makes its next leg up. If the cup and handle pattern actually does present itself, cup and handle patterns are pretty strong on larger time frames, in my opinion. So when you're looking at a weekly or a monthly or a daily, I like technical patterns. To me they hold a little bit more weight. Some people are different, whatever. Okay, so that's, early pattern recognition could be that. All right, so we're also stair stepping up. So every week so far off of this bottom, we've made a higher low and technically already a higher high. So we're now looking at this. We can zoom in a little bit on the weekly for now. Oh gosh, I suck at that. Okay, we can zoom in a little bit on the weekly here, and we're right here in this golden pocket. Okay, and if we take a look at the volume profile, okay, not too horrible. I mean, we've got some wood to chop in here, but nothing crazy. So that's kind of what we're looking at there. So anybody who wants to maybe, including myself at the moment, actually might want to make an entry. Where am I going to look right now if I'm just working off the weekly chart? Well, I'm going to be looking at this 42 area. So we've gotten through this little chop zone area. When we zoom into the daily, we get a little bit better. But we also have this 12 EMA right here, which is that red line. So the 12 EMA, it bounced off of it last week. Maybe we get another shot at it. Who knows? We have the 200-day moving average is this white line. So we're above it, which is really good. So you had this, you bounced off of it over here in September. You got an undercut on it, and it quickly recovered and got right back over. So the 200-day is kind of holding for us now, which is pretty good. All right, let's zoom into the daily and see what we see here. Okay, so we've got this daily chart, and kind of what jumped out at me. And this is not going to be perfect because, well, the neckline is kind of broken already, but what I'm starting to see as an early developing pattern would be your inverse head and shoulders here. So I would be looking for something like that. Now, the problem with this, I guess technically, is that the neckline is already broken. And now what you're going to be starting to look at now is it's, does it backtest? Yeah, it kind of backtested the neckline right here, didn't it? So, and this is kind of where the 12 EMA is. But what kind of gives me a little bit of an inkling of a heads up is that if this pattern starts to play out, it's not going to be perfect because the neckline is already broken. But so let's just say we do draw down a little bit. We could potentially see another 200-day moving average tap, and that would actually set us up with an inverse head and shoulders look. Again, it's not going to be perfect because we broke this neckline already, which is also the 50% retracement off of this move. So we've kind of gotten over the 50% retracement, and we're coming into testing the golden pocket. I mean, look at this run. There's no real true daily consolidation. You had a little bit right here. I'm going to zoom in. Right, we've had some daily consolidation right here, but it was shallow. And there are some technical analysts that would say, this is still all one move. So they're going to sit and be patient and wait for true daily consolidation. So if true daily consolidation does actually start to play out, again, into FOMC, into market weakness, all the good stuff that we know is going on, I'm going to be starting to look for this daily inverse head and shoulders pattern psychology. It's not going to be perfect because the neckline is broken. So the question would be, what am I going to do? Because I want to get a position in LEU because there is this whole impending United States Department of Energy fuel cycle kind of build-up thing, and which we don't have and we need to get. Is Centrus part of that gig? We don't know, but have they had contracts for the government before? Yes. Did they mess it up? Yeah, they did. Whatever happened happened. Who knows? It's not for me to go digging around. The charts will tell me everything I need to know. So regardless of that, that would be the pattern that I'm going to be looking at for some sort of add. So I guess what I would say is that if I get a neckline test again, I'm going to see how it reacts. So for me, the spot that's important to me is the 42 area with this 38% retracement because it kind of lines up with this neckline over here, and it would be a little bit of an undercut of this 50% retracement, and we'd be looking at testing a lot of these moving averages. So this is the area of contention and confluence where I would want to see a support. Let me just do this and see how our volume shelf plays out with, yeah, look, so the volume shelf, again, you got a spot right there in the volume shelf. So 42. If I want to enter in this name, which I do, I'm going to be targeting 42. I may actually put in a good to cancel order on that. And maybe it'll be a small scale, maybe a half position, maybe a quarter position. We'll see. I'll look at it when the time comes. But this seems to be a pretty good spot. This 42.15 is where I would want to add. where I would want to actually initiate a position. Yes, I've held Centris before many times. I've traded it. It's a good trader. The thing is the float is nuts. The spread is nuts. It's this thing can whip around on you like crazy. So I mean, I've never had a hard time being picky on entries with this one because it usually will provide them for you. So I mean, be all end all now. We kind of have our real area where we want to be looking. It's a 200-day moving average seems to be the spot if we it's where it likes to bounce around off of. We do have a declining 200-day. I'd like to see it start curling up. Um, the 50-day has crossed over in September, which is always a good sign, right? We like that. So we've had that this drawdown just decimated this thing. All right, so the Brave, congratulations to the Brave that were bottom fishing this thing in May. Yeah, congratulations to them. I know I've definitely made some trades through here, but that's about it. So yeah, I am looking at the 42 area right now would be kind of a target zone for me for entry. Um, it would just be a matter of where my stop is, and it's a tough one because you could still have a lot of drawdown on that stop. So we have to. I would have to see where it reacts. I would surmise that I can't even describe how I would want to do it right now, to be honest with you. So this would be the first spot that I'm going to be looking at, the 42 area, and see how it reacts there. Maybe it kind of sets like maybe we get some shallow daily consolidation. I mean, there is a little bit of a base here. If you took let's look at the 4 hour. Yeah, I mean, it did have, it kind of went sideways here for a little bit. So it's kind of building a 4 hour base here, which isn't horrible, right? So 42, it's just tough, man. It's a tough one. But you said you have all of this chop action in here. So to me, 42 is kind of the spot. And then maybe you could just decide, or I could decide, we'll see. Uh, maybe I enter 42 and I give it like a stop of 40, or maybe I just add half a position and hope that I get that inverse head and shoulders. So I take another piece at, let's say 36 or 38. That kind of gives me a full position. And then if the 200-day moving average is breached, or maybe even this low is breached, then maybe I have to rethink it or stop out and take my losses and take it from there. So that would be it on this one for now. Over and out.